Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hopefully you guys are doing very well today. And in today's markets, guys, yes, your eyes are not deceiving you. We are now on our 6th day worth of rally in a row. I know, stark contrast from the bottoms that we had just a few short weeks ago. We have now recovered roughly half of the loss on the S&P from the top to the bottom. And now we've also recovered almost half of the loss on the QQQs as well, which raises the question, are we now out of the clear? Well, maybe it might not be so simple. We know that we have a ton of macroeconomic headlines in the rest of the week, such as the non-farm payrolls on Friday and GDP coming up as early as tomorrow morning. We also know that we have a second half of the week to get through in terms of massive earnings from a lot of companies that you guys know very well, such as Microsoft, Meta, Eli Lilly, MasterCard, Amazon, Apple, and a bunch of other companies too. So in today's markets news, though, we did have some key pieces of news that did impact the markets ever so slightly. Early this morning, we had the consumer confidence, which showed that we hit the lowest amount of confidence since 2011. Additionally, in the afternoon, which helped raise the markets a little bit and kick them into their second gear in the afternoon, was comments from Commerce Secretary Howard Lutnick saying that one trade deal was done, but waiting on the approval from the unnamed country's leaders. He refused to name which country that was, but apparently there is a trade deal that is now being finalized. We just don't know with who. And lastly, to top it all off, we have an interview with President Trump and ABC News, where Trump is pushing back against the economic anxieties in the population of the United States right now. So those are all three big pieces of news that came out throughout the day, and we're going to recap those in a few short minutes. Thereafter, we're going to take a look at a few earnings that I have prepared for you guys, and there's a ton to choose from today, guys. I mean, there's like 7-8 companies that I could have talked about, but to keep it simple, we'll be going over SOFI, PayPal, UPS, and Visa. I know. Special shout out to Starbucks, Coca-Cola, down here, Spotify, which had good earnings, Booking.com, SPGI, which isn't even on this list. There's just so many to cover. I'll do my best to, on the Friday session, maybe cover a few of them. You know, we're not going to cover Spotify, but they had very good earnings. They're very resilient in this time. They showed that monthly active users was on the rise, revenues were on the rise, profits were on the rise as well. A little bit of a disappointment in terms of Q2 guidance, but reaffirmed their full guidance throughout the year. Booking.com put out some insane numbers, but they're still down in the after hours. And SPGI, which is not on this list, also put in some very decent numbers overall off of the back of their competitors' earnings last week when we heard from Moody's, which I covered on the channel. So those are the four that I'll be covering today. As I said, I'll try to catch up on the rest, maybe on the Friday session, but the most I can do in one of these videos, guys, is like 4, because I spend about, anywhere between 7 to 9 minutes each. If not, it'd be very easy, right? I just read you the headlines, go through the data, and that's it. I could do them in 1 to 2 minutes, but I don't think that's the point, right? Maybe I should give my insight more than anything, which takes a bit longer, yeah? So after those earnings are done, we'll take a look at our technical analysis portion of the video, our major rundown of the indexes, followed by a rundown of our big tech names, see how big tech is looking coming into some crazy earnings for the rest of the week. Most of all the remaining major tech companies will be reporting, Microsoft and Meta tomorrow, and then Amazon and Apple on the Thursday session. So it should be pretty fun, guys. And no portfolio update for today. I'll keep that one as per usual on the Friday session. I do one on Monday and then one on Friday as well. So it should be a very fun video, guys. I'll try to keep it as short as possible. But as always, if you want to skip to a certain section, the timestamps are down below in the video description. Let's get right into it. So the SPY up 0.63 today. The Qs up 0.66%. And overall, the market was fairly broad, all things considered. Take a look at the heat map right here. You will see what I'm talking about. Fairly broad market, even though we had some news catalysts and some earnings and stuff like that, right? Semiconductors, a little bit of a pain point here. NVIDIA was higher, but the rest of the index was indeed down. Financials doing really well, and those are going to be helped tomorrow by Visa's earnings, which came out very nicely after the bell. You can see SPGI here after their earnings up about 2.58%. But overall, fairly decent day. Everybody except for energy had a good time. One day relative, you can see that even better. Most of all the sectors performing well to the upside, except for energy, which leaves us on a 1-week relative performance that looks like this. Technology and consumer cyclical have had the biggest bounces, arguably because they dropped the most during the initial tariff drama roughly 3-4 weeks ago at this point in time. And funny enough, consumer defensives, the area where people were rotating into to avoid most of the damage, those have been kind of left behind as of recently. Although they did not drop much during the tariffs, they also have not had that much of a rally to where what people were anticipating rather. So before we get into more technicals, guys, I'll do a very brief summary of the news events that we had today. And then lastly, we're going to take a look at, or after that, we'll cover the earnings, all right? So take a look at number one, consumer confidence. So consumer outlook hits the lowest since 2011 as the tariff fears mount overall. The three expectation components, business conditions, employment prospects, and future income, all deteriorated sharply, reflecting pervasive pessimism about the future. Indeed, the level of respondents expecting employment to fall over the next 6 months hit 32.1% of all people expecting employment to fall. Not so good for the expectations of the jobs market. Keep in mind, this consumer confidence survey, guys, is 5,000 households, and they are asked 5 questions on these 3 topics: business conditions, how easy is it for you to do business right now, employment prospects, and future income, yeah? So the level of respondents seeing jobs as hard to get rose to 16.6%, up half a point from March, while those seeing jobs as plentiful fell to 31.7, down from 33.6, so getting squeezed on both ends there. Future income prospects also turned negative for the first time in 5 years. This, you can see that right there here. The decline was the sharpest amongst consumers between 35 and 55 years old, and in consumers earning more than $125,000 a year. That was in terms of the income expectations for the near-term future, right? So moving on further, the downbeat views extended to the stock market, with 48.5% expecting lower prices in the stock market in the next 12 months, the worst reading since October of 2011. Inflation expectations also surged at 7% for the next year, the highest since November 2022. Now, this is not the Fed's target, of course. This is just what people like you and I think when asked these surveys. Recession expectations hit a 2-year high as well. Government postings fell by 59,000 amid President Donald Trump's efforts to pare down the federal workforce. Transportation, warehousing, and utilities also saw a drop of 59,000. So the job openings in terms of government level have been getting squeezed to the downside. That adds to a little bit of pressure that we had this morning. JOLTS jobs openings coming down about 200,000, 300,000 from the expected amount. A lot of those were government jobs, but you did have other types of jobs as well. But most of the bulk of that were the openings from the government, which we just talked about in this article. So just a quick review of some charts of consumer confidence. You can see that here, the consumer confidence index is the lowest that we've seen now at this point, steadily falling off a cliff here since the tariffs were announced in early February, down all the way to the pandemic levels overall. Take a look at the present situation versus expectations index. People feel that their present situation is getting worse, and their future expectation situation is the worst that they've had pretty much since 2012. So keep that in mind. The family's current financial situation has gone from good on the decline, and now bad is on the uptick. And we can also see the expected financial situation 6 months forward. People saying better are less and less and less, and people saying worse are starting to get more and more and more. So, and then they have the perceived likelihood of a US recession over the next 12 months. That is at the highest level that we've seen since 2023. So keep all of that in mind. Those are what your peers feel about the economy right now, whether or not that's true, whether it's not, whether it's anecdotal experience. That is, of course, up to you to make that determination. I'm just here to report the data, and apparently consumers are not as confident as they were maybe just 3-4 months ago leading into the presidency because, of course, mainly about the tariffs, right? So that was number one. Then in the afternoon, the markets actually didn't respond too poorly to that, matter of fact. They actually rose. I mean, they had a bit of a dip. They were able to get it back. This second leg higher here in the afternoon has to do with this news article. Commerce Secretary Howard Lutnick says one trade deal is done. He did not name who it was, but that was the piece of news. We're not going to get into it more than that, because we don't have any details. He kind of teased it. Then he said, well, listen, no trade deal is final until President Trump signs it. So they're waiting for approvals back and forth. So he kind of gave us a little bit of a teaser. Supposedly, we're going to get it tonight at some period of time. We'll see if that actually happens, but something is possibly brewing, whether it's tonight or tomorrow in the next 2 days. We should have something more concrete, and that is what the market is looking for. It's looking for deals, which is why you had that rally. To cap it all off, when asked about, well, this is basically, he wasn't asked directly about consumer confidence, but you kind of got to read between the lines, right? Trump had an interview with ABC News, which will be premiering tonight, I think 7 p.m. Eastern, where he pushed back against economic anxieties that the interviewer was challenging on and saying China will probably eat those tariffs, meaning who's going to pay for the tariff, the U.S. consumer or China if they keep wanting to export? President Trump is of the opinion that China will probably eat the tariff, But of course, that's just speculation right now. We will see. Trump sought to reassure nervous Americans, even as he recently urged them to hang tough as tariffs begin to take effect, writing on his social media platform that it won't be easy, but the end result will be historic. Now, this Trump argued that is exactly what he said during his campaign, and that is what people voted for. Now, that is true, objectively speaking. President Trump did run on the campaign promises of tariffs, and he indeed did say that people were going to have a transition period. The interviewer then brought up a poll recently done by ABC News, The Washington Post, and Ipsos, and more than 7 in 10 Americans believe the economy is in bad shape, see his tariffs as a negative factor in price inflation, and think it's very or somewhat likely that the economic policies will cause a recession in the short term. That was the results of the polls. Whether you agree with the poll or not, that is completely up to you. Once again, I'm just reporting the data. Whether you agree with who did the poll, whether they're left-leaning, right-leaning, right? It's just these are the peers, right? Your American peers. So, who are we to say whether or not they're right or wrong? That is just their opinion overall, right? Moving on down, despite economists' overwhelming concern that Americans will pay higher prices for tariffs on goods from China, Trump asserted that the Chinese probably will eat those costs. Moving on further, the interviewer asked, it'll raise prices on everything from China, from electronics to clothing to building houses. Trump reiterated and said, you don't know that. You don't know whether or not China is going to eat it. The interviewer said that's mathematics, but to President Trump's defense, he does have a point. Nobody knows. We don't know either whether or not China, how much of those tariffs China is going to eat. And in terms of comments made by President Trump last week, the final tariff rate will probably not be 145% either. So that being said, we don't know the final mathematical impact on tariffs. One thing's for sure, they can be borne by either the consumer entirely, or they can be shared between the consumer and the producer. It's going to raise prices for somebody. Which proportion, right? Consumers or producers, it raises prices for. We won't know until we get the final gist of the tariffs on China and exactly how China plans to respond, and exactly, to take their words, who is going to eat most of that tariff burden, right? Those are your pieces of news throughout the day, which, pushed and pulled the markets all throughout the day. So curious to see if we do get more details on that trade deal tonight. That's everything for your news headline recap. Now, let's dive into some earnings, shall we? So we're going to start it off with SOFI. So I'm going to try to get through these as quickly as I possibly can, guys, because we do have 4 of them to do. So SOFI had a very nice pop early in the day and then gave it all back. Where have we seen that recently? Google. So SOFI, from the morning to the top, they were up almost 11% before kind of giving back almost the entirety of the move, ending up only 0.53%. They did have very good numbers, though, and nothing is wrong with their business, just a stock moving into a very hotly contested area of resistance right now. So keeping that in mind, the EPS beat was a very nice beat by 84%. Might seem like a very big number, but keep in mind, we're talking about pennies here, right? So it went from 3.3 pennies to 6 pennies. They did have a very nice beat on revenue as well by about 4.29%. Let's have a look at some of the main things that were addressed in the earnings call. So in terms of SOFI, SOFI CEO says that the fintech bank is bringing back crypto investing. That was one of the biggest highlights of the, the earnings call. We're going to re-enter the crypto business, which we had to exit due to a regulation back in 2023. We'll re-enter the business of allowing our members to invest in crypto. We want to actually make a bigger, more comprehensive push into crypto this time to include really providing crypto or blockchain capabilities in each product area that we have. Moving on further, it's a very big market, guys, so nice to see them do that. With the fastest revenue growth in more than a year SOFI had, unlike other companies being buffered by recession worries, SOFI also raised its guidance for 2025 revenue and earnings. So they had a double beat and a beat and raise guidance on overall for SOFI. So very nice there. In terms of the actual numbers for SOFI, guys, they're pretty good, right? They beat revenue, as we saw. They beat the member estimates as well. Their members are on the rise by about 3.2%, beat on the EBITDA as well. And they raised the annual revenue guide by 1%, but still a beat, raised on the EBITDA guide by 3.5% too. And they also raised the EPS slightly, ever so slightly, but it was good, guys. I mean, take a look at the revenue growth here. Year over year, it's still 32.7% revenue growth. In terms of the total members, we have a 34.3% rise up to around 11 million members, which is fantastic. And even the margins, right? SOFI at one point was an unprofitable company. Now they are profitable and increasing not only EBITDA, but also their net income margins every single quarter, now up to 9.3%, which was quite impressive for the company. Taking a look here overall, we also have SOFI Technologies in terms of their lending revenue profile, which is the yellow. You can see lending revenue is moving higher. Technology platform revenue as well. That is also moving higher too, talking about their Galileo software, a piece of software that they, well, outsource to financial institutions for financial institutions to build a better user interface and client experience for their clients. That's their Galileo business. And then financial services revenue. So all the stock products that they offer, right? The credit card products, right? The debit card products, stuff like that. So financial services, that is also growing very, very nicely quarter over quarter. So all lines of business for SOFI are firing on full cylinders right now. That's exactly what you want to see. Speaking about those, here's what they do. They have, you know, a whole member homepage where they offer you different services like banking, credit cards, investing services, and loans all together. So a very nice app, right? Looks like a banking app, but with a much better user interface, in my opinion. Moving on further, members. Here you can see the fantastic member growth rate and the substantial growth of products. Now, don't get it twisted, right? 16,000 products. It may seem like a lot, but you know, when you have an investing platform, one stock is one product, right? So, you know, a lot of these are stocks and stuff like that, right? But still, nice to see that they're offering more and more products to their clients, so clients don't need to go elsewhere either. Adjusted revenue, as we saw from the prior graph, everything's moving up solid in the last 4 to 5 years at this point in time, so we don't need to spend too much time on this. One thing I will bring your attention to is the adjusted net income, which used to be deeply negative and now significantly positive, with a very nice raise in guidance even for net income for 2025. Overall, and pretty much the only other thing that I wanted to show you guys, since we've shown pretty much the net revenue growth and stuff like that, the only other thing that I wanted to show you guys is in terms of loans. Since it is a bank, right? We want to know, well, how are their loans doing, right? Are they strong? Are they weak? Whatnot? What is happening right now? Well, you can see the personal loans have been ticking up higher, and also the student loans have been ticking up higher too. Don't mind these black bars right there. This is the remaining 9-month origination, so we can't really see those. Just focus on the blue components right there. The new first quarter originations, are they higher or lower? You can see that personal, student, and home loans are also higher. So it should be looking pretty good for the company. Net charge-offs, right? How many people are defaulting on their debt obligations? Well, we can see that there's a nice little downtrend here in the last 4 quarters of there being less net charge-offs overall to the business. And here are your student loan net charge-offs. They've now dropped from the high 0.6% range to 0.47, which is pretty good overall, guys. Nothing bad to say here by the company. As a matter of fact, it was a very strong report. They had a little bit of a pop. They dropped, giving back their gains, but who can blame them, right? Leading into these earnings, this company was up, you know, into the top of earnings 35% in the last 6 days. It doesn't look like that big of a move because SOFI's price is just so cheap right now, but this is a 35% move. So one could argue that maybe a lot of the earnings bullishness was already baked into the price, and they did just come off of a big resistance area, which was challenging for the bulls right there, yeah? So SOFI, in terms of, is it a trade, is it an investment? Well, I cover this one on the channel every single day. You guys know me. I like to wait for the pullbacks, for some higher lows, and then go for some swing trades, or just write some short puts down there for some swing trades. But is it a decent long-term investment right here at $13.50? Well, they have a forward price to earnings of right under 52. You may think that's a little bit high. This is true, but keep in mind they're growing EPS at a fantastic clip every single year as they are coming off of zero. Revenue is also impressive at an 18% per year growth rate, and right now we're sitting at a 0.94 peg. That's pretty good. That's your price to earnings divided by the EPS growth rate. So we can compare things on a common denominator. Under a 1 peg is fantastic for a company, and forward price to sales at 4.57, I would say is very manageable for this company overall. Here is your loss to net profit margin graph. As you can see, profit margins have been steady, and now we have 9.3% in Q1, which is better, arguably, than most of their recent quarters. In terms of their forecast as well, we can always take a look at EPS. You guys will see that EPS is rising in the proper direction and rising rapidly, I would add. And revenue as well, no problem for them as well, guys. Revenue is steadily increasing. So I do still believe that even here at 13 bucks, SOFI is a good deal for the long-term portfolio. It's in my long-term portfolio as well. Accumulated some more shares down here. I mean, I started buying SOFI, guys, a long time ago, yeah? I started my positions all throughout there with a big, long DCA process for like a year and a half, 2 years, kind of like what I did for Palantir. The company is currently trading right now at a $14 billion market cap. Now, that's not bad. Where can I possibly see SoFi going over the next maybe 2, 3, 4 years? I mean, 30, 40 billion market cap for what they're doing if they continue on with these revenue growth rates and acquiring new members is not that far-fetched. It sounds like a lot, but it's about a 2x, 2.5x from here. I think that is quite manageable for this company. So those are my thoughts on SoFi. We cover them every single day in the daily market recaps, for a reason, because they're a highly sought after retail stock. There's a lot of hype around the company. You know, it goes through cycles, of course, but it is a very strong institution, which is challenging legacy banking right now. And I do possibly believe that it does deserve a chance, but I would like to find it a little bit lower if the markets pull back overall. Could be some nice swing trade opportunities down there, or some opportunities to add to a long-term share position. But here, objectively speaking, is not a bad buy. Of course, it's not as good as 10 bucks, but is it objectively a bad buy? Then the answer for me is no. It's actually still quite decent. That's it for earnings number 1. Now let's get into company number 2, which is going to be PayPal. So PayPal, they reported their earnings first thing this morning, and they were up 2.14% on the day. Now, there's a lot of things that happened with PayPal recently, guys, but mainly what you have to focus on is they are no longer, I wrote it right here, they are no longer a growth stock anymore, unfortunately. Their revenue growth is just too low for that, 6.5% per year. Their EPS growth is exactly where this company is positioned for the future. They are no longer a top-line total payment volume growth company. They are now going to be a free cash flow and net margin expansion company, and that is the premise that Alex Chriss has been talking about for the last roughly a year now since he's been the new CEO. Let's take a look at their numbers, shall we? Then we'll recap everything together. So their numbers on the day were not objectively bad. They did miss on revenue by a slight little margin here, 0.74%, but the EPS was really where it's at, guys. They're shifting from top-line revenue growth to net margin profitability. And sometimes it takes Wall Street to adapt a little bit to that change, but their free cash flow yield is very high. What's a company that we've seen make a similar pivot in the last year? Salesforce, all right? And you remember how Wall Street reacted to that initially too. They dropped the stock 20%. Now moving on to PayPal. PayPal reports the first quarter earnings beat and maintains their forecast. Let's have a look here. The company missed on revenue, as we just saw, and reaffirmed its guidance for 2025 due to macro uncertainty. I think there's a mistake here. It shouldn't be due. It should be in spite of macro uncertainty or something like that. But they did reaffirm their guidance, which is pretty good. While sales increased just 1% from $7.7 billion a year ago, PayPal said the results reflect a strategy to prioritize profitability over volume, rolling off lower margin revenue streams. That is the new CEO's priority and has been what he's been talking about for the last year. Transaction margin dollars, the company's key measure of profitability, grew 7% to $3.7 billion, marking the company's 5th consecutive quarter of profitable growth under CEO Alex Chriss. So notice, no longer emphasizing total payment volume growth or total revenue growth. In every transaction, they're trying to make more efficient. That is what's measured by transaction margin dollars. Moving on further, more than 45% of US branded checkout is now running through PayPal's upgraded experience, Chriss said during the earnings call, and the company expects to see this accelerate even faster as it rolls out into Europe. He also highlighted some strong debit card momentum with nearly 2 million first-time PayPal and Venmo debit card users in the quarter, which is very good. An increase of nearly 90% from last year, so expanding that debit card service very well. Venmo had a very good showing. Venmo revenue rose 20% year over year, which is very good. Total payment volume for them increased 10%. So more activity and more payment volume overall, which led to more revenue for that division. Chriss is focused on better monetizing key acquisitions such as Braintree and Venmo. DoorDash, Starbucks, and Ticketmaster are among businesses now accepting Venmo as one-way customers can pay. Jefferies analysts highlighted PayPal's China cross-border exposure as an emerging risk tied to potential new tariffs and changes to the de minimis exemption. I'll remind you, what is the de minimis exemption? That is Temu and Shein's entire business model. They would ship tons of packages into the United States in very small boxes because anything under $800 of value per package was tax exempt. Trump removed that rule roughly 2-3 weeks ago at this point, all right? So what is going to be the exposure here? On the company's earnings call, the CFO downplayed that risk, noting that less than 2% of PayPal's branded checkout TPV comes from Chinese merchants selling to the US. So apparently not that much of a risk for PayPal, but the question by the Jefferies analyst was a very good one. Moving on further, for the second quarter, PayPal issued better than expected guidance forecasting adjusted EPS of $1.29 to $1.31, which was above the estimate of $1.21. So PayPal, nice little beat on current quarter EPS and a raise on forward quarter EPS as well. For the full year, PayPal chose to reaffirm its guidance, not going up, not going down, citing global macro uncertainty. The company expects earnings per share of $4.95 to $5.10, which is exactly what it was when they forecasted this last quarter, and free cash flow in the range of $6 billion to $7 billion, which again is a 10% free cash flow yield at the current stock price right now of mid-60s. So not too bad there for PayPal overall. We can take a look at some more of their numbers just in the mix, right? So they beat the transaction volume. We knew that. They missed the revenue. They missed the TPV, total payment volume. We missed that. They missed the free cash flow estimate by a very small amount this quarter, but reaffirmed guidance for the full year, and they beat on EPS overall. So not too bad here, guys, but you can see the total payment volume growth here, 3.3% year over year. Somewhat slow. Revenue growth here by 1.2% year over year, somewhat slow as well, but we explained the pivot, so it should be fairly natural to you guys right now. Monthly actives as well was up 1.8% to 224 million. That's measured against Q1 of 2024, but you can see they lost 5 million people since Q4 of 2024. Maybe a little bit of seasonality. We will definitely take a look at that. Transactions as well here, guys. Quarter over quarter was up 70 basis points. Sorry, you can't see. And the GAAP net income, if I move myself over here, GAAP net income, the last line right down there, that was up year over year, 500 basis points, meaning 5%. Very, very strong. Look at this mark. This is the highlight of the company, guys, in my opinion. The EPS growth, the free cash flow growth, and the net income, aka profitability, profitability, profitability. Let's move on to something else. You'll see here, this the free cash flow yield and the buybacks. More free cash flow, which is the blue line right there. Free cash flow yield now 10%. That's crazy. You don't usually find companies at a 10% free cash flow yield. I'll remind you though, free cash flow yield is a byproduct of the company's market cap. It is free cash flow on a trailing 12-month basis. Let's say it's 6-7 billion, which it'll be on the forward basis, but it was last year as well, divided by the market cap, right? The market cap down here, you can't see because once again, my head's in the way. Market cap is 64 billion. If the stock price goes up, the free cash flow yield goes down because it's a byproduct of one another, yeah? But right now, it's fairly juicy. And what do they do with all that free cash flow? They start to buy back shares. Here's your buyback yield. Additionally, buybacks are going higher as the free cash flow increases. Here's your active accounts for PayPal. As you can see that we had a little bit of drop off, and that's the reason that PayPal fell off an absolute cliff 2022 to 2023, and now they're picking back up a little bit incrementally, yeah? Now, US versus international total payment volume growth, you can see that it used to be growing really well, and now the growth has slowed down. They've cut several unprofitable or marginally profitable lines of business, and now they're focusing on the core components of the business overall. Take a look at the growth presentation as well. You can see that what they're trying to do is the 4-step plan here, win more checkouts, as now they're competing with a lot of different people, guys. Not only MasterCard and Visa, but also Apple Pay, Google Pay, and other providers of that nature too. Shopify Pay as well, right? So they're trying to win more and more checkouts in light of the total addressable market. They want to scale Omni and grow Venmo. We talked about that already. Driving the PSP profitability in terms of payment orders, right? They're trying to just, optimize debit routing for those debit card services, and then scale the next gen growth vector. So they're adding some blockchain efficiency right here overall in terms of sending crypto or buying and selling crypto overall. So we're not going to go through all these slides because we already covered them. Just wanted to remind you of their business model that they're going into right now. So all that being said, down here at roughly still 3-year lows, is PayPal a buy? Well, it depends why you're buying the company, right? If you're buying this company because you think it's a growth stock, you are highly mistaken. But if you're buying the company because it is possibly going to be a free cash flow monster and a buyback monster in the future, well, that may be a different premise, right? You can see here that they have authorized buybacks worth 17% of the active float. They've already bought back 6 billion stocks in Q1, and those buybacks will heavily increase EPS. Now, you may say that is a fake way of increasing EPS, and not an organic way by increasing revenue substantially and then increasing net earnings, right, and keeping expenses low, this is true. But a lot of different companies do these buybacks as a strategy to increase EPS. That being said, at 66 bucks, it's currently trading at a 13 forward price to earnings. Why is it so low? Because the growth is low, right? That's why they're not giving it that high of a multiple. And the forward peg right now is about a 1.1. So you're not paying a lot for this growth to begin with, but the growth is still not very high. Forward price to sales is a 2.09. That also makes sense because of the low revenue growth overall. And the free cash flow yield, there it is, 10.44%. In my opinion, the only reason to buy PayPal right now is not because it's going to be a crazy growth company. It's because it's going to be a free cash flow monster, an EPS monster, and a buyback monster as well. And keep in mind, right, price to earnings is a factor of that EPS. So if they're able to steadily increase their EPS by accelerating buybacks and doing a lot of free and having a lot of free cash flow, well, that is the one thing that's going to contribute to moving the stock higher. But I would not be buying this one, assuming that they have so much more total payment volume to go after. The competition towards them is still fierce. Now, am I buying PayPal? No, but am I trading it a little bit? Would I go for a little bit of a swing trade down here into support area and trying to go for the top end of the range, maybe back to like 80, 90 bucks? Yeah. Would I be adding it to a long-term portfolio? Probably not. I think there's better and more consistent companies out there that don't have to resort to, going to utmost profitability to boost shareholder returns. That's always nice. But if you ask me, if I had to compare it, like it's a payment network at the end of the day, right? You can argue there's different types of payment networks, and I would agree. But the only two payment networks that I have in my long-term portfolio, well, three actually, I have Visa, MasterCard, and American Express. Now, before you say something, I know, it's not exactly like PayPal's business model, but, Visa and MasterCard are also high-margin companies growing faster than PayPal's top-line revenue, arguably have larger competitive advantages and larger moats, and are additionally free cash flow and buyback monsters as well. So we kind of can compare an apple with an orange in that respect. And that's just my opinion on PayPal right there. That is everything for PayPal. Now let's do earnings number 3, which is going to be Visa. So we were just talking about Visa when we covered PayPal, as a matter of fact, but the reason I like Visa, guys, is because I never have to look at their earnings. Literally almost never. They're such a boring and fundamentally sound company. You're talking about a company that always usually has, low 50s to mid 50 profit percentage in terms of net profit margins. You're talking about a company that is also a free cash flow monster with not a lot of debt, always have a tremendous amount of cash on the balance sheet. And contrary to PayPal, they don't have the same problems of consistency. This is consistent EPS growth. This is consistent revenue growth, something that PayPal has struggled with as of recently, right? Now it's on the uptick because of the new CEO's plan and business model, right? But it's just not consistent. Just not consistent. Not as much as Visa is. This is the most consistent company, or one of the most consistent companies in the entire market. And they did not disappoint. Look how often they can beat their earnings. They missed once in the last 5 to 7 years, guys. Only once. This time they did not miss. They had a nice EPS beat by 3% and a nice revenue beat by 0.45. You're not expecting them to blow quarters out of the water. They're just too consistent and too predictable of a company for that. But always nice to check their earnings because we want to know, is the consumer at risk currently? Not in the future, but currently. Visa doesn't usually project in terms of saying whether or not they believe that the consumer will be in a better place in a year from now than right now. They tend to only give that type of guidance one quarter ahead and then adjust as they kind of go along. But here it is for the quarter. Visa beats profit estimates on strong card spending volumes and plans a $30 billion buyback. You guys like buybacks? Those are some juicy buybacks, right? That is roughly 4.5% of the float. Now, compared to PayPal's going to do a lot more. As I said, 17% of the float, but still, Visa is no stranger to buybacks. They do them all the time. Moving on further, here's the only thing in the article. I'm going to save you the gist of the article because it's not that long anyways, because it's such a boring company. There's really anything to report. Consumer spending remained resilient, even with macroeconomic uncertainty. That's the only thing they said, guys. That's literally the only thing they said. But you can kind of ascertain whether or not that's the case through their numbers. And that's what we're going to do right now. So first quarter results here, net revenue, 10%, absolutely nuts. Non-GAAP 10% as well, which was very good, extremely good overall. If we move a little bit further here, you'll see that the net income was increasing by 5% and EPS was also an increase by around 8%, which is very good. Now the KPIs, or the key business drivers as people like to call them, payment volume up 9%, cross-border volume total 16%, and processed transactions 11%. It's crazy, right? More volume and more number of processed transactions as well. Very, very, very strong. It means they're just getting more and more customers overall, guys. Absolutely fantastic. Here's your growth. The yellow is the current quarter versus the most recent quarter, Q4 of 2024. You can see that credit, debit, and total are also on the rise, whether you measure nominal or constant currencies. Payment volume growth, US and international, you can see the exact same thing. Yellow up and to the right, international largely the same as well. Slight little downtick on total here, but that's fine. US was a bright point for the company too. Moving on further down here, total cards. Well, we did get more total cards here, 1.4 up to from 1.3 in billions. Can you imagine, guys? Billions of cards overall. Debit cards as well, 3.3 billion. Debit cards are, supported by the Visa network overall. And total, you have a total card amount, guys. 4.7 billion cards. Now, of course, one person can have many cards, but at the same time, guys, that's an absolute ridiculous amount of cards overall. Additionally, across all their different business components here, service revenues, 8%, data processing revenues, international transaction, other, and client incentives. Client incentives, you guys know what those are, right? In terms of, offering points or like stuff like that, or the Visa network of airport lounges, stuff like that, right? Client incentives, right? Up 13%, very good overall. And that's pretty much everything that I had to show you guys, unless we look at the free cash flow number, which was a very cool $5 billion. They did $4 billion of share repurchases during the quarter. Free cash flow yield is pretty good, guys. Free cash flow yield is not, it's not crazy because the company has a very large market cap. Free cash flow of $5 billion is roughly what you would expect from a company like Visa on any given quarter. If you take a look here at the financials, you'll see that, in the past 4 quarters, 5 quarters, how much have they brought in? Anywhere between 5, 6, 5. This one was a bit lower, but they do grow it every single year, yeah? So as long as that free cash flow number is steadily rising every single year, which it is, the company is currently in a very decent spot. Now you might say, well, Will, there's never any times to buy Visa, right? It never pulls back. Well, that's not true. It does pull back. It's just that when it does pull back, you kind of have to strike when the iron is hot, right? If you take a look at the monthly time frame, I would say that a good time to buy Visa with a larger sum, because I buy this company with regular DCAs. I've been buying it since all the way back here in 2018. I have MasterCard as well in my long-term portfolio, and I buy it every single month at the first of the month, as well as everything else in my long-term portfolio, because I just DCA. But if I'm looking for one bulk time periods where I can purchase with a larger quantity, just go historically back on this chart and look at the 12 EMA. Whenever you tap into the 12 EMA, it's usually a decent time to deploy any stale capital that's maybe just sitting in your account, looking for an entry into Visa and MasterCard. That's a pretty good entry overall. Now, right now at 344 though, are they a good buy objectively speaking? Let's have a look. They have 54% net margins from this recent quarter. We talked about the $30 billion in buybacks. At 345, they currently stand at a 30.55 forward price to earnings. Now, context matter. You may think that that's high, but then again, don't forget, when a company is very predictable and consistent, usually Wall Street gives it a higher multiple. It allows it to trade at a higher multiple, right? Looking at Visa's PE ratio, you can see that historically down here, lower 30s is kind of as cheap as you get. Even in the pandemic, they went down to a 31, right? You can see that over the last roughly 10 years, the lowest that you can find it really is high 20s to low 30s. So objectively speaking, if we use those historical standards as our guide, it is trading right now relatively cheap. Now, I'm not saying it's cheap. I'm just saying it's relative to its historical norms at a 2.55 peg, which is also historically okay. It's very rare to find Visa under a 2 peg, guys. It's just not that type of a company. Like MasterCard as well, like Microsoft, they very rarely trade under 2 pegs because they're just so consistent, right? Free cash flow yield, 2.8%, which is okay. It's very rare to find this one above a 3.5% free cash flow yield. Usually you want to find companies paying over 4 or 5% free cash flow yield because Warren Buffett and tons of other people say, if you can't get over the risk-free rate, which is basically your short-term treasury yields, 4.5, 4.75 percentage points. Well, the company's not going to beat the S&P, or you're not beating the free cash flow yield. You got to take that with a grain of salt, right? The context matters a lot. Visa is an outperformer. It usually outperforms the benchmark indexes over a long period of time. So even if this one has a low free cash flow yield, you're probably going to be good just because of how solid of a competitive advantage it has, how much of a moat it has, and just how consistent and profitable it is overall, all things considered. That is everything I had for you guys for Visa. Visa is always a buy. It's just a question of how much is it a buy at current times. Right now, it's still a buy. If you don't have any Visa in your portfolio, I can't give you financial advice. All I can say is that historically, it is relatively cheap overall. But, you know, when do I add a bit more heavy than usually? If I'm looking for either a swing trade or, you know, a bit of a heavier DCA buy, just take a look at this monthly 12 EMA, yeah? You could just go back over the last, I don't know, 20 years, pretty much, 15, 20 years, and see that normally when Visa clips into this 12, it's probably synonymous with the buying opportunity, even though sometimes it can dip lower. You guys get the point, right? That's everything for Visa. And now lastly, we'll do one last one. I know the video is going to be long today. I'll keep it shorter in the technical analysis portion. We're going to do UPS because UPS matters for the current sentiment, especially when we're talking about tariffs, yeah? That's why I chose them. Right, so taking a look at UPS, guys, we know that UPS has had its fair share of problems over the last 3 years. Nobody is definitely doubting that. Why? Well, because the company's share price is a net byproduct of their earnings per share. And what happened with UPS's earnings per share? Well, they fell off a cliff. Quite simply, you don't have to ask yourself too many questions. What happened here? We had the pandemic. Everybody was ordering a ton of stuff from home because interest rates were at zero. Everybody had a bunch of stimulus money. So there was a lot of orders and a lot of volume going through that network. Since then, inflation has been high. People have tapered back on discretionary purchases, and you have seen UPS's, not only them, but FedEx as well, their volumes have just declined and declined and declined, and we have still since been trying to time the cyclical bottom of that. Now, of course, with the tariff risk and everything like that, maybe we have just pushed the cyclical bottom a little bit further out than this year. It was supposed to be the recovery year, but now with tariffs in the mix, you kind of have to, approach this one with a little bit more caution, although the fundamental valuation right now is quite cheap. Keeping that in mind, I'll cover that at the end of this analysis, but their earnings right now did fairly decent, right? The company is only up right now. They had them this morning. The company's roughly flat on the day, but they did post good numbers for this quarter, but there's a few things that I will bring your attention to here. They beat on EPS by 8%. They beat on revenues by 2.36%. That is not the biggest component of this earnings. This is UPS to cut 20,000 jobs on likely lower Amazon shipments. Profit beats estimates, though. This is for two reasons, which I'll explain below when we get into it, okay? The Amazon part. First quarter profit beat the market estimates, and the parcel delivery giant said it was going to cut 20,000 jobs to lower costs in an uncertain economy and in anticipation of weak volumes from its largest customer, Amazon. So weaker volumes from its larger customer. However, remember that last quarter, they did also cut a lot of the Amazon contract because Amazon contracts are done on razor thin margins, and UPS wanted to increase their margins on every package shipped. That's why they started taking less and less Amazon packages. But now they're adding to the fact that they may forecast lower Amazon volumes because of the tariffs and because people being very careful with their spending. Very important. That being said, it expects to save $3.5 billion in 2025 from job cuts and by shutting 73 leased and owned buildings by the end of June. Over all the earnings that we've covered so far this cycle, guys, this is the one where I've seen a company cut the most amount of jobs. We've seen several companies cut a little bit of jobs, 500 jobs, 1,000 jobs, but they all add up, guys. That is always somebody's brother, sister, mother, father, or child, right? So keep that in mind. The tariff situation right now and the economic impacts are real, even though we don't feel the impacts of the tariffs right now because they largely haven't come into effect so much. This is what companies are starting to do. They're downsizing to protect margins. I will remind you from the corporate finance handbook, who is a company beholden to, right? Who is the company beholden to? Is it to its employees? No, it's to the shareholders. You may feel that that's ethically wrong, but that is the nature of a corporation, guys. It is beholden to its shareholders, not towards its employees. Unfortunately, of course, as I've just said, extensive tariffs by US President Donald Trump have slowed down trade and led companies to reduce costs in anticipation of a demand hit. For parcel delivery firms, the slowdown is likely to reduce the need for shipping services between companies. The actions we are taking to reconfigure our network and reduce costs across our business could not be timelier, said the CEO, Carol Tome. UPS said it was not providing any updates to its full year outlook. So no updates on guidance whatsoever, due, of course, to the economic uncertainty. Now, the company last year said it would cut its workforce by 12,000 jobs. This was last year, so they already cut last year by 12,000 jobs to save that EPS. Now, another 20,000. The Atlanta-based parcel delivery firm in January warned that it was accelerating its plan to slash millions of deliveries from its largest customer, Amazon, which was 11.8% of overall revenue, but operating on very, very, very razor thin margins. So, is it worth it for them? Is it not? Well, apparently the company took an executive decision and said it was not. UPS also faces a sharp downturn in volume from China-linked bargain e-commerce sellers, Temu from Pinduoduo and Shein, after the US decided that starting May 2nd, it will collect tariffs on goods that were duty-free up to $800 per individual sale, talking once again about the de minimis rule that we just talked about in PayPal earnings. In US domestic segment revenue grew 1.4% to $14.5 billion in the first quarter, driven by an increase in air cargo and improving revenue per piece, even as volumes decline. But volume, this is a company that works on volume, guys. Even if they have a little bit of pricing power, it's not going to do a lot if they continue to face slower and slower volume for processing, right? So this company, with all its problems, with its cyclicality and everything, currently trading right now at the low prices that we've not seen since either COVID, 2019, 2018, and even all the way back here, guys, 2014, 2015 prices. That's crazy for UPS overall, guys, right? To not be trading, even though revenue back here was like 60 billion, and now it's something like 90 billion, they're at the same share price right now. It's a masterclass in why EPS matters. Why are they the same price as 2018 and 2020? Well, just look at the EPS. The EPS is, right, exactly the same as it was 7 years ago at this point. So the share price is also the same. Keep that in mind, yeah? So net income of 5.5% was not too bad. That's towards the lower end of what you would expect for UPS. Usually they like to have 8, 9, 10%. That is fairly low for them. $1.5 billion in free cash flow as well. Revenue growth is very low, but this is not because of the tariffs. It's always been low. FedEx and UPS are giants at this point. You're not expecting them to grow 10% per year anymore. At $96, is it a good buy? Well, I've been saying that UPS was an interesting stock to possibly acquire for a long-term dividend position now since 120. At 96, it's even better. But notice I say long-term. This is a long-term position. If you want to buy a company, a legacy company, let's be honest, they're not going anywhere. Is UPS and FedEx going to go out of business? No, they're two of the only worldwide logistics providers. Sure, there's more smaller ones like DHL and stuff like that. At the end of the day, though, right, when you go to an airport, whose planes do you see? UPS and FedEx, right? So that being said, and not $96, they're trading at a 12.85 forward price to earnings. This is one of the lowest forward price to earnings that we've seen in a very long time, guys. Even through 2023 slowdown and 2022, 11, 12 is as low as it got. Prior back here, 2018, it was a 14. In 2016, it was a 14. And all the way back here in 2011, it was also like a 12, 11. Normally, it's been a good proposition to buy UPS when it's trading in or around a 12 price to earnings, yeah? The PEG ratio right now at 96 is a 1.07. The trailing 12-month free cash flow yield is a 6.6%. That is really, really, really good. And I'll remind you, at $96 right here, the dividend yield is 6.76%. This is very good, guys. Not only that, I mean, don't take it from me, right? If it was a trash company in terms of dividends, right? Well, it wouldn't be in one of the best dividend funds. It's in all the dividend funds at this point. VIG, this is known to be one of the best dividend funds that possibly is out there. As you can see, United Parcel Service is right down here, right? They're not in the top 10, but they're very close at about a 3% position for SCHD, yeah? So people are buying this one for the dividend alone, but when you're in a dividend, if you adjust for total returns right now, let me click this adjusted button. With dividends, you are higher than where you were prior. That's the benefit of dividends overall. But if we remove the dividends, look, I mean, guys, we're monthly oversold right now. Like, where else have we had monthly oversold? During the great financial crisis, has it always been a good time to buy UPS at monthly oversold conditions? Sure. Can it drop lower? Yeah, but then the dividend yield gets even juicier and the valuation gets even juicier. It's not going out of business is what I'm here to say, yeah? So long-term portfolio, if you're a dividend investor, it may be something for you to look into, but even maybe for a bit of a swing trade with some time on it, shares here back up to the swing highs of maybe 120, 130, pushing it at the limit. Sure, you can have some drawdown, but I think eventually when this one does recover, it's going to go on a very smooth recovery path, but it might be a little bit bumpy here for at least the next 3 to 6 months. So any buys should be keeping that into consideration. One factor which could heavily have an uptick on the stock price in a short amount of time could be a trade deal between the US and China that may lift the stock temporarily in terms of sentiment. That's where most of the short-term gains could possibly come from in the short term. So keep that in mind. That was everything for our news recap and all our earnings recaps. It's taken 50 minutes so far. I try to do these as efficiently as possible, guys, but you guys know, right? It's not as if I can do these in 2-3 minutes. Well, I can, but nobody would learn anything. What am I just going to do? Just say the numbers? Oh, they beat on EPS, they beat on revenue, give no context and just give the P, the PEG ratio and say whether I want to buy it or not. Who does that help? Arguably nobody, right? The context is always far more important than just reading numbers and giving you just a very shallow view on, yeah, I would buy it here, or like, yeah, here's the support, here's the resistance, right? So hopefully you guys appreciate these earnings recaps. Now let's dive into the technical analysis. I'll try to keep it as quick as possible. All right, so taking a look at the SPY right now, up about 0.63%. Look at this monthly candle close, possibly coming up on the Thursday session for the S&P. Very, very, very nice inverse doji, inverse hammer candle, whatever you want to call it. One thing's for sure though, guys, we got a ton of stuff, yeah? We got the GDP coming up tomorrow, ADP employment change, and the non-farm payrolls on the Friday session. Keep that in mind, please, because it's very important. And we have huge earnings, Microsoft, Meta, and then on Thursday, Amazon, Apple, McDonald's, MasterCard, all companies that can move the market either way. So keep that in mind. We are also coming into our zone of resistance, which we have clearly labeled. A few, it's been on the chart now for a while, right? 565 down to 550. That does not change. Who is in control right now? It has to be your short-term bulls. Daily uptrend is nice. 6 green days in a row. Are we overbought on these smaller time frames? Not quite on the 4-hour, not quite on the 1-hour either. So it can lead to a bit more expansion, but keep in mind, we are coming into big resistance and the 200-day EMA slightly above us. Any downswing right here, going to be looking for a higher low. Anything above 507, looking for a higher low to possibly make a second attempt. If the bears take back too much of this move, you might just end up in some form of an awkward tightening range down there. Keeping in mind, we are also in a very nice weekly uptrend. So any move lower on a daily would be looking for a weekly higher low. Anything above 508, looking for that weekly higher low. If they can't get it done in one clean shot like this, guys, you might just be looking for a higher low and then make a second attempt at it. Overall, not looking bad. We are beyond the fear lows at this point right now, but we would be lying to ourselves if we said that for sure the bottom is in, right? There's still a lot of macro uncertainty, a lot of uncertainty around the tariffs, and how all of this is going to play into the economy come later on in the year, Q3, Q4. It could be like 2018 all over again, yeah? To where we have some initial tariff fear early parts of the year, and then we come back because a lot of that fear abates, and then when tariffs actually hit, then you get part 2. I don't know. History often rhymes, but doesn't repeat itself exactly. All I'm here to say is that if we have a swing trading mindset, we need to be waiting for dips to write short puts down here, or for better entries with a closer stop loss below a logical low, right? And not just chase the market here into resistance, having maximum FOMO, saying, okay, we're going back into a bull market, a next 2-3 year bull market. Now, although several other indicators point that, you can look at, well, when the VIX has gone over 60, what's the market's done in the next 1 week, 1 month, 1 year? All of you have seen those stats, right? Thrust indicators, breadth indicators. What's happened after this, right? Sure, right? Sometimes those have very, very high hit rates, 60%, 70%, but those are not 100% hit rates. So keep that in mind. Everyone is different. We just have to use logic here right now, right? In terms of a long-term portfolio, the plan is always so simple, guys, so simple. Every paycheck, 10-15% of what you earn should be invested in high quality companies or high quality ETFs and held for the long term, 5, 10, 15, 20 years, not focusing on a day-to-day basis, on a week-to-week basis. No, the investments you make today for your long term are going to pay off in the long term. Do it for your future self. Moving on to QQQs right now, same concept, right? Nice daily uptrend, that is what we know. So moving on into resistance, almost above the top end of resistance right now, 476 down to 465. Any move lower, looking for a higher low, anything above 429. Higher low for possible further trend continuation, but if we pull back too much because of earnings or macro or both, we might just get trapped in some form of an awkward tightening range right there. We know that the bulls on the weekly are in control of this chart. It's looking good, not gonna lie, guys. It is looking good, yeah? but we don't know what's going to happen with these earnings, nor do we know what's going to happen with this macro. If everything's good, fine. We blast off higher, perfect. Here's your next resistance range, 493 to 508. My long-term portfolios and my long-based swing trades will appreciate that. However, I have a ton of buying power if we do pull back to start selling some options again, selling puts on my favorite companies below the markets for any big red days that we may have. On to XLF Financials, up 1.04%. This one also clearly in a new daily uptrend overall. Looking not too bad, breaching through resistance right now, 48.28 down to 46.81. I'll remind you who's in control. Still your weekly bulls, weekly downtrend, high, higher low, higher high, weekly uptrend. This is the first one to actually do it. It is your lead bull in the markets right now. If we just keep pressing higher, well, you know that the resistance range is all the way up there, talking about 50 up to roughly 52. I can make this box a little bit bigger, but you guys should understand that it's the all-time high area. If we pull back a little bit, the bulls have tons of space, anything above 45.22, just a weekly higher low for further trend continuation. But it's nice that we've gotten through the resistance range now, because now back testing it, you got a bunch of stuff. Horizontal support, which is all these guys, and resistance there, and also the 200 daily EMA, which is just sitting down there, 47.11. Moving on to XLV. XLV trying to break above for a daily uptrend. I mean, it could kind of use UNH's help, because UNH has been providing no help whatsoever, but it's getting the job done. Even though UNH is a very large component there, the pharmaceutical providers are doing most of the heavy lifting right now. That being said, I wouldn't say the clear trend break is there. They did close incrementally above it, but it's not so clear. A clearer time frame is maybe on the weekly. If you can close a weekly candle above these highs, 139.22, you finally have the healthcare sector catching up to the rest of the market in some form of a weekly uptrend after being in a downtrend here. We finally have the early stages of recovery. If we continue moving higher, your next resistance range is all the way up there, bottom end 144, and extends into the top end 148. I mean, you can put this box at the top end, at the bottom end, or just encompass everything. As long as you guys understand the general area of where we're going into, it'll make a lot more sense when you do this analysis. Any pullbacks on the healthcare sector, you guys know the drill. I'll be looking to write some short puts on my favorite company. Special shout out to UNH. Fantastic opportunity to be writing some short puts, but it is very expensive. Also a nice opportunity for a bit of a swing trade, yeah? Daily, deep oversold conditions for a fantastic stock. Moving on to SMH right now. So SMH also in the context right now of trying to go for a new daily uptrend, right? It was a little bit messy right there. They lost it. Now we're trying to get it back with this engulfing move. You got to understand though, where are we? We're right into resistance, 232 down to 213. Keep that in mind. It's a very large area for the bulls to breach. Now, looking not too bad on the weekly, looking for the weekly uptrend shift, but no actual clean break above 212.61. You guys see that, right? Equal highs. Need this week's weekly candle to breach up into there for me to say, okay, weekly uptrend in motion. Monthly lows are definitely set, and maybe the bulls are looking for a little bit more. It'll be tough to V-shape this entire thing, but not looking too bad, all things considered. And if we drop down here looking for a higher low, anything above 184.33, looking for a higher low for maybe a second attempt if they can't do it right away, I'll be looking to write some short puts on my favorite companies all the way down there, deep below the fear lows overall. Moving into the Russell right now. The Russell, well, hey, I got my analysis there from yesterday. So the Russell, I mean, same concept, right? Daily uptrend is clear as day right now. Nice move pushed by the bulls into resistance. 200 down to 188. So we're getting through it, reacting from the 200 weekly EMA, which is this green line right there. And now, I mean, you guys can understand, right? It's a very big level that the bulls have to get through. So hoping that they can do it shortly. Moving on in, weekly was a downtrend. You now have high, higher low, higher high. That is a confirmed new weekly uptrend looking good. We'll see when they top out. One thing's for sure, if they do top out here, looking for a higher low, anything above 181, looking for a higher low. When you go looking for the higher lows, guys, that's when you get a better stop loss and a better take profit target rather than just buying here and go for the absolute moonshot saying that, you know, we're through clear skies already. You can if you want to. I mean, the Russell is still a decent opportunity for a long-term portfolio if you want some small cap exposure, but I wouldn't say small caps are out of the wood for the macro purposes just yet over the course of this year. Lastly, onto the Dow Jones. Dow Jones also on the weekly time frame, not breaching, right? Other sectors have hit weekly uptrends. The Dow Jones has not just yet. Above us is resistance 41.3 down to 40,500 roughly. The bulls are trying to get some work into there right now, but if we get rejected from here and have a leg down, well, it depends how far we go. Looking for a higher low though, anything above 37.8. Looking for a higher low, maybe for a two-step breach process of that resistance range, pull back too much, though, you're just going to go into some awkward consolidation phase between support, which is down there, 39.1 down to 37.9, and the above resistance range that we were talking about. But the monthly closes are looking quite advantageous on the Dow Jones, if I do say so myself. Now, today we're going to skip over the dollar, but, all you need to understand is we're still monitoring for possible recapture and maybe weakening of the dollar. Maybe. The dollar moves slow. All you need to understand here is, even though markets have bounced a ton, right? Is there a lot of foreign investment into US dollars right now? No, or you'd be seeing something like this, right? You'd be seeing big candles, not very weak candles. So you can understand that most of the move is coming from people who already have dollars. Nobody's needing to buy dollars right now to buy US assets. So it's just repositioning from retail and institutions. There is some foreign investment, right? But are people rushing to the US markets right now? No, that's what you need to interpret from this chart. Yields also moving to the downside as uncertainty continues to get lifted, which is good. We know that there's a Trump and Fed put all the way up here at 4.5 on the 10 and around 5% on the 5. Why do we say that? Because every time we come up here, either you have Trump coming out and talking very nicely about the tariffs, or you have some Fed members publicly commenting on the fact that, yeah, if things get really bad in the jobs market, we'll probably cut and we'll probably backstop the markets, right? I mean, they don't directly say that, but when they're asked about it, that's how they kind of answer the question if you read between the lines there. So that's it for yields. And now bonds also rallying to the upside. Bonds with a very nice recovery. I was saying down here that TLT was a good trade opportunity. I still think it's a good trade opportunity, but you have to have a long time horizon, guys, because these issues, there's so many issues that impact the dollar, the yields right now, the credit spreads, right? So anybody buying bonds right now, you have to have a very long time horizon, talking like, 9, 12, 18 months at this point, right? It's not just going to skyrocket like this, like it's Palantir, okay? Moving on to gold right now. Gold is roughly flat, establishing a barcode of a range the last 5 days, trying to establish some form of an accumulation range. Is it an accumulation for a long or an accumulation zone for a short? That is obviously the question. Until you get a break, you won't know. Rather than speculate, wait for the break, right? That'll give you the clear direction. Hill's still holding the 12 EMA, though. The one thing is that the weekly is extended from its 12 EMA. You can see that here from the weekly overbought conditions. I still think gold will be a decently performing asset over the foreseeable future, but that does not mean we cannot have a daily downtrend into weekly consolidation. Come tap the 12, as it's done many times throughout these rallies over the course of the past roughly year at this point, right? That would be a nice buy area that I'd be looking into. Nice little daily downswing right there. You can find maybe 4-hour oversold or even 1-hour oversold conditions combined with the weekly move into the 12. Yeah, that'd be a nice swing trade opportunity for a long, in my opinion. Moving on to Bitcoin right now. Bitcoin also doing a whole lot of nothing, channeling its internal gold, I assume, after breaking above this big area of resistance, which was 92,000 down to about 87. It's just doing a whole lot of nothing. Sure, we have the weekly uptrend. The monthly upswing is looking very nice, right? High, higher low, trying to go for the higher high. Bitcoin is adopting a two-faced position right now. Number one, it's being viewed as a risk on asset, as we've seen a more risk on move in equities, but it's also acting as a currency because the dollar is very weak right now and Bitcoin is an expression of the US dollar. That being said, it has not done anything. So what we're looking for still is a higher low for possible uptrend continuation. The bulls are in control there and maybe a little bit more weekly upside. But if we do pull back, even the weekly bulls have tons of space, anything above 75K roughly, looking for a weekly higher low for possible further trend continuation. I think a nice trade entry opportunity would be down there on a retest. Just watch your lower timeframes overall. That's everything for your overall market recap. Now let's do big tech and then we're done. All right, so moving into Apple right now. Apple was up 0.51% today. We know that Apple has earnings on Thursday. The expected move is about 4 or 5%. So anything I say in this video is largely going to be impacted. Well, anything I say in this video will change by the time Apple releases their earnings. The big focus of earnings is going to be, are they currently still protecting their services moat that they have with the most profitable margins for the company overall? And are they able to finally increase revenue, or are they too nervous about tariffs? Will they reduce their guidance on iPhone sales, which has been a struggling point for the company in the past 2 years as refresh cycles have been somewhat underwhelming? That being said, price action is coming into resistance, 211 up to 221. The good thing though, a lot of space off the lows, anything above 190, looking for a higher low for possible further trend continuation. If Apple comes down here after earnings, I will gladly write some puts down there and maybe even take a call debit swing trade from the lows using this as a stop loss benchmark to the highs. That's the way that I'm looking to play this one. Overall, the valuation is still a little bit rich. We did it at 170. So you can imagine if it was a bit rich on the peg at 170, at 210, which is like what, a decent amount higher than that, right? It's like 25% higher. Well, you're probably looking at closer to a 30 price to earnings, right? 28 maybe, something like that. So it is somewhat expensive still. So I'll be curious to see what they have for earnings. But Apple, not looking too bad. Beholden to the China tariff news, though. Moving on to AMD right now. AMD, same concept and same problem. AMD has earnings next week on the Tuesday session, but still unable to claim the daily uptrend. Cannot break above 97.21, which is into this resistance range, 112 down to 98. It's a very big level, guys. A very big level that the bulls have to get through right now. Overall, still no new weekly uptrend either. That would be a same break of 97. We'll see if they can get it done by the weekend. If not, any pullback, we do have a lot of space here. Anything above 83, looking for a higher low. For possible further trend continuation, I would like to start my swing trade longs if I did want to take them down below here. It is a good company for a long-term portfolio, but keep in mind, long-term is long-term, guys. 3, 4, 5 years plus. Let the thesis play out. The data center thesis, it is not yet here. So we have to let that data center thesis play out because the company right now is trading at a very, very cheap valuation, all things considered, a 24 price to earnings and a 0.69 peg. If it does drop a little bit, I'll write some short puts under the market, but curious to see what they say for their earnings come next Tuesday. Moving on to Amazon right now. Well, I mean, Amazon, what's more to say, right? They have earnings on the Thursday session as well. The expected move is about 6-7% in either direction. So anything I say in today's video will be changed by the time we get earnings. That being said, Amazon is very wide range right now. It's not so clear on the daily time frame, right? Well, it is. This is a daily downtrend. This is an engulfing move, looking for a higher low and try to go for the trend change. So keep an eye on that for earnings. If we blast above here, you guys obviously know that we have a new daily uptrend overall and that we're through resistance 191 to 180, a fairly large area for Amazon, all things considered. The clearer time frame here is the weekly, right? Weekly downtrend, high, higher low, possibly question mark, higher high. I don't know. Need to breach 191 to be able to say that. If Amazon comes down after earnings, I'll be writing some more short puts down there and maybe even positioning for some further swing trade longs from the fear lows, possibly up to your range highs, $190 to $200 overall. Amazon's a fantastic company. I'm looking forward to hearing from them. What are they doing with free cash flow? Is their e-commerce affected by tariffs at all? How is their Prime Video business? How's their advertising business? And all parts of their business, because we know Amazon is an octopus. They have arms almost in everything right now. One thing's for sure, though, no matter what happens to Amazon in the short term, it's still one of my favorite companies in the long term, because look at the EPS expansion through 2028. And also the revenue expansion through 2028 is going to be absolutely massive. And we can't forget, guys, their AWS growth, right? AWS is crazy right now. It's the largest cloud provider of them all. On to Google. Well, Google had their earnings last week and we actually liked their earnings. We covered them on the channel. If you haven't had time to watch that video, maybe worth a rewatch before we get into the rest of big tech. Everything was doing pretty good for them. That being said, on the daily timeframes right now, well, it's not looking too bad. The bulls are trying to go for the engulfing move. Yeah, this was a daily uptrend. They lost it by flushing these lows. Now we get the engulfing move, looking to get it back for some daily higher lows, then go for a daily trend change. That would be a break of the earnings highs, 168. But where are we? We are in resistance, 174 down to roughly 163 is that resistance range. The weekly time frame shows a clearer picture. It's a weekly uptrend, but still no confirmed daily uptrend. So a bit of time frame mix up right there in terms of what we're looking at, but the weekly is looking good. One thing's for sure, at 170 or lower, they are fantastic opportunity in the market, very low. If we come down more after the rest of big tech earnings, I will gladly write some short puts down there again, because I've been farming the heck out of them down there, and also maybe some swing trade longs with the stop loss in the lows and a take profit area in the swing highs. Moving on to Meta. Meta also up 0.85% today. Not too bad of a day for Meta, but I mean, Meta, guys, they have earnings tomorrow, right? So what can we do? All I can give you guys is the expected move. Expected move for Meta, about 7% last time I checked, which was yesterday. Expected move, 6.5%. So we'll see what happens, right? 6.5% from here. I mean, you're going to be all the way back down there to the midpoint. If Meta does come down there, fantastic buying opportunity in my opinion. The focal point of Meta's earnings is all about advertising. In the context of a possible, keyword possible, recession, are people pulling back from advertising, namely big corporations. That'll be front and center, and 7% to the upside. If they crush it, well, we'll maybe be clearing this resistance range, give the bulls full range of motion right there, and open up another trade, which is the breakout retest, and possibly run. That would be a trade opportunity if I would ever see one, because then we would also be in a weekly uptrend with a nice little back test of this big resistance range that's been plaguing Meta for a while. Curious to see their earnings tomorrow, and of course, I'll cover them on the channel. Microsoft, same concept, guys. Microsoft has earnings tomorrow after the bell. So anything I say today is going to change because of the after hours earnings move. That being said, the expected move for Microsoft is about 4%. You could take my word for it, or we can just go double check. It's about 4%, right? 4% by Friday. We'll see what we get. 4% to the upside will mean that you are clearing this resistance range. Pay special attention to 406. If you can close above 406, it does something very big, guys. Nice, big engulfing move. This is a breakout. You open the door for a retest trade and run. That'll be a juicy trade opportunity overall. If we move 4% to the downside, well, the weekly is not yet in an uptrend, right? And we have got a lot of space. Anything above 356, looking for a higher low. If you get a pullback to the downside, you got support below you, 377 down to 365. Also a nice area for some swing trade longs, in my opinion, or adding some to a long-term portfolio. We will be covering their earnings tomorrow after the close. Moving on to Netflix right now. Netflix up 1.37%. Another monster day for Netflix, right? But pulling far away from the 12 EMA right now. This is when I get a little bit nervous. And if I'm riding any swing trade longs from down here, now is probably an area where you're going to try to think of starting to cut the position periodically, yeah? Coming into daily overbought conditions right now. 4-hour has been overbought for the last few trading days. But overall, we have not lost the hourly 12 or 26 EMAs, nor the 12, which should be your guide time frame right now. That being said, when we do pull back, there's tons of space, guys. Anything above 900, looking for a higher low for possible further trend continuation. If we pull back too much, open up a daily downtrend, does it matter? No, because who's in control here of the weekly? Weekly bulls all day, looking for a higher low on the weekly, anything above 818. Higher low for possible further trend continuation. I'm a big fan of playing the dips on Netflix. We covered it many, many times on the channel over the last 2 weeks. Hopefully you guys now know where I stand in terms of the fundamentals. It's a fantastic company. I own it myself in my long term, but there's a time to buy this thing, and chasing it here may not be the best value proposition because it's currently back above a 40 forward price to earnings. Moving on to NVIDIA right now. NVIDIA up 0.27%. Still struggling is NVIDIA. That's normal. They're into a resistance range, 115 down to roughly 105. Also no clear daily uptrend nor daily downtrend. We're just trapped between two levels overall. The weekly time frame is the clearest time frame of them all, in my humble opinion. It is a weekly downtrend, looking for a higher low, and trying to go for the weekly uptrend. That would be a break above 115. If they cannot get it done and trend back towards the fear lows, it'll be a swing trade opportunity for some short puts, writing some short puts down there, benefiting from NVIDIA's low valuation in around $100, which is currently a low 20 forward price to earnings and under a 1 peg currently. I know NVIDIA has been getting hit left, right, and center from all the tariff headlines. China this, China that. NVIDIA, is it losing its dominance? No, it's still a very dominant player. They're still doing fantastic things for the overall industry. The total addressable market from here to 2030 is absolutely massive. And don't get it twisted, guys. The data center trade is very much alive. Who do we hear that from? TSM, Micron, and we also heard it from ASML over the past month, all other semiconductor players that have not seen a slowdown in demand for data centers at all. We also heard it from Google. Google reiterated their $70 billion spend. If the rest of these companies tomorrow and the day after reiterate their data center spend, should bode well for NVIDIA's price action, but we will see. Moving on into Tesla right now, up about 2.15% is Tesla. Not too bad of a day for them. They started off red and recovered to the green side. So guys, this was a daily downtrend engulfing move. Still no pullback after that earnings rally. This one from those lows is up a lot, guys. It's up 31%. It doesn't look like much, right? Because I mean, comparing with this move, it's up 31% from those fear lows. If we get a pullback, because we know Tesla is into resistance right now, looking for a higher low, anything above 222, higher low, maybe for a further trend change, you'd be looking at back testing all these guys in roughly 270, 260 range. Not looking too bad. Weekly time frame as well. If they close the weekly like this, guys, it is a confirmed weekly uptrend breakout, which means your monthly lows are set and you might be looking for more monthly upside. Back to the all-time highs? Doubtful, especially in this macro environment right now. Although Tesla has some long-term positives, the short-term negatives are also very front and center right now. With such a large pullback, maybe the expectation is maybe for a tightening range, more so than just blast off to like $500, $600. But we'll take this one day at a time for Tesla. Decent price action right there. No trades from me until we possibly get a pullback. And I may try my hand at selling some short puts down there. On to Palantir next, the company that has also had a very substantial rally from their bottom. Look at the fear bottom rally from Palantir, guys. 76%. That is absolutely nuts. Since the beginning of April, what a fantastic month from Palantir overall. Daily uptrend right now is clear as day, right? Higher lows are right down here, $89 roughly. If we get a pullback soon, and there's not much resistance left, all-time highs are nothing, right? If we get a pullback, because now it's pulled far away from its 12 EMA, which Palantir is no stranger to, but eventually it will pull back. Anything above there, looking for a higher low, possibly for further trend continuation, even if we lose it and go into a daily downtrend, no problem at all. Looking for a weekly higher low, yeah? Weekly downtrend, nice engulfing move. Looking for a weekly higher low for possible further trend continuation. They have earnings coming up as of next Monday, and I'm very curious to see, especially the commercial revenue segment from Palantir. Fantastic company. It's expensive. It's a great company, but you're paying a lot for it right now, so just keep that in mind, right? As we pay more for a company, the risk goes up, not down, yeah? So I know that their total addressable market is large, but keep in mind, they're already almost a 300 billion market cap company, right? Sure, can it go 2-3x over time? Yeah, but not instantly, right? It'll take a long time for them to grow into that valuation. On to SoFi right now. They had their earnings. We talked about it already. Not going to spend too much time. Looking for a pullback from resistance, which is $14 up to roughly $16. Looking for a higher low, possibly for trend continuation. If we do pull back, I'll be selling some short puts down there. Valuation is good overall. That's the only trade setup that I currently see on SoFi. On to Uber now. Uber also trying to crack through the resistance highs, guys. $79 to $80, trying to move into the top end of the range, looking very good. Daily uptrend is clear as day right now. Any pullback, if we fail, looking for a higher low, anything above 71.26. Higher low for possible trend continuation. If we do pull back, I might try my hand again. Well, not try my hand, I'll do it. Selling short puts down there, lower $70 range. I like the valuation of Uber down there. Not looking too bad. 28 forward price to earnings down there, and a one peg. The only other trade opportunity is, this is a weekly downtrend, big engulfing move. Beyond our resistance points, breakout, retest, then you might get a swing trade opportunity, but taking it here into resistance is always a gamble. And lastly, TSM. TSM up 0.66% today. Not looking too bad, right? We also got comments from Howard Lutnick today that he was praising TSM and their movements to the United States for production facilities. That being said, where's TSM right now? 172 to 156 is a big resistance area for the company. They are in a nice daily uptrend, which leads to the fact that if we do pull back, looking for a higher low, anything above 146, looking for a higher low for possible further trend continuation. Keep in mind, the company is now also in a weekly uptrend, downtrend, highs, higher lows, higher highs. Weekly uptrend means your monthly consolidation phase is largely finished, tapping nicely into the support zones down there. If we do pull back, I'll be looking to write some short puts again down there. And it's always a fantastic company to add to a long-term portfolio, guys. The valuation is so cheap. Even at 160, it's so cheap. Don't feel too bad you missed the bottom. If you're buying it for the long term, right? 5, 10 years, well, the valuation here is very good for some future ROI, especially if you expect the company to do what they always do, which is be the industry leader in their respective niche of semiconductor production. So I love this company. That's why it's in my own long-term portfolio. And I'll remind you, we covered their earnings. Demand still stays very strong for the next 2 years at least. That's everything I had for the market rundown, guys. Hopefully you enjoyed that. Sorry for the long video. If you enjoyed it, consider dropping a like. Would appreciate it, guys. Put a lot of time and effort into these. If you can drop a like, it would be much appreciated. Second, if you subscribe to the channel. Sorry, if you're new here, we do these videos every Monday to Friday after the close. And lastly, if you have any questions, now's the time, guys. Leave them down below in the comment section. Glad to answer any questions you may have. Always love reading your guys' comments. And lastly, if you ask me about my portfolio, I mean, I can go through these very quickly, like in a minute, yeah? Just take a screenshot, right? I rolled my SoFi calls first thing tomorrow morning. First thing this morning, 21 cents for next week, 14 covered calls. I closed the HIMS position that we had, the swing trade. The HIMS is doing very good. SOXL, I also added some before today's rally, call it insider information maybe. I added about 2,000 bucks of HIMS to my long-term IRA. Lucky me. Sometimes we get lucky sometimes with today's move, yeah? SOXL, new contract, 10.5, 22 cents for Friday. We also opened some earnings trades on Visa and Starbucks, which will largely be worthless by tomorrow. These are short puts. And we closed. Thanks for asking. How did my earnings trades went from yesterday to today? All profitable, all closed, almost worthless. Pretty much just money in our pockets. Those were the only changes made today. If You want to have access to all of my trades in real time, guys. We have a private Discord trading group for that effect. The link is down below in the description always. You get all my trades, whether they're wheel trades, shares, call options, call debit spreads, leap trades on options, or just long-term portfolio construction and long-term portfolio trades. I share all of that with the Discord members. You can join a community of over 150 members who all trade the same strategies, all here to help each other. And you can ask me all of your questions all throughout the day in our chat rooms on your stocks, your options, your long-term portfolios, anything you want. You can also attend our private morning live streams Monday to Friday for about 2 hours to 3 hours after the open, where I trade live and take all of your guys' questions too. So if you're interested in something like that, you may consider the link down below in the description. If you have any questions on the Discord, feel free to send me an email or leave them in the comments and I'll be glad to answer. So hopefully I'll see you in there soon if that's something that could be interesting. And if not, I guess I'll see you back here on the channel. Take care. That's it for me. I'll try to make tomorrow's video less long, but when there's so many earnings, you gotta do what you do, right? So that's it for me, guys. Take care. Have a great rest of your evening and peace.